Good evening, everyone. I'm honored to welcome each one of you to the KBF family monthly session. Everyone, everywhere is talking about the new normal. True, we are all looking to replace with the conventional methods and striving to find new ways during this pandemic. As you are all aware, KBF always initiates on the most relevant subjects and situations. Share information with current market conditions, changes or updates in the government rules and regulations, which of course is our core objective. Today, we will be focusing on the energy sector and how it has impacted the current pandemic situation. To conduct the talk on energy sector, we have an energy-packed man, an expert in the field, who will share his thoughts and knowledge with us tonight. On behalf of KBF, I wish to express our sincere gratitude and welcome our keynote speaker, Mr. Gopal Balasubramaniam.
Thank you.
Delighted to recognize and welcome our honorary member, Dr. Mohan Thomas, Vice President, IBPC, Mr. Shaji Walikat, our Advisory Board Chairman and Founder President, Mr. Abdullah Terwat. I request everyone attending to make the best use of this webinar by keenly taking notes and asking questions. Welcome you all once again, and let me invite our steelman, the President of KBF, KR Jayaraj, for his opening address. And welcome you all once again.
Namaskaram. Our honorary member, Dr. Mohan Thomas, our advisory committee chairman, Abdullah Terwat, IBPC Vice President, Mr. Shaji Waligat, ICC President, AP Manigandan, and ICBF President, Mr. Babaraj will be joining. Dear members and over and above everybody, our special guest, our good friend, Sri Gopal Balasubramaniam. Good evening.
Good evening.
Today is a special day for us. And Mr. Gopal Balasubramaniam, we are all, I personally, his FB posts are very favorite of mine. And his post on our conclave in last December, it was widely noted by many people. I received many calls because his FP posts are like a screenplay. It will have all the details which even we have not noticed. And that is the time onwards, he is there in our hearts, and we wanted him in KBF platform. And he came forward to support, to share his knowledge and his experience over so many years in this field to us, and which is, you know, we are thankful to you, we are grateful to you for that.
Thank you.
And I don't want to talk anything more about this subject because I cannot talk any single word more than what you are going to talk, because you are the encyclopedia in this, and we are awaiting for your excellent presentation. And all the executive members today, there may be a little less in the participation because ICC MC and ICBF MC both are happening today. So there will be some reduction in the participation, but still we are expecting a very good crowd today because of our FB post and all, and many people will be benefited from this session, we believe. Thank you very much, one and all. We'll be meeting again. Back to Shaheen.
Thank you very much, our President. Could I request our patron member, Dr. Mohan Thomas, for his kind words? Dr. Mohan Thomas.
Good evening, everyone.
Good evening.
It is always good to see that KBF has been very active in their webinars, bringing in different topics of interest. And today's topic is an extremely important topic in the current times. Looks like there's a future in oil gas for years to come. And we have chosen none other than the most expert person in this country who have been in this area, was a very special interest in this area. We used to talk off the records on this subject many times, and I'm sure his talk will be an enlightened talk. Mr. Gopal, I once again welcome you to this august crowd, and then looking forward to hear you. Thank you.
Thank you, Doctor.
Thank you very much, Doctor. Could I have our founder, president, and advisory board chairman, Mr. Abdullah Tarwat, for his kind words? Mr. Father Abdullah is
visible. Anyway, Shaheen, we will
yeah. Okay.
proceed
Now
for the next, and if he's coming, then we will call him.
Main part of the agenda. Could I invite Mr. Fadil Hamid to invite our guest speaker and introduce our guest speaker of the day, Mr. Fadil.
Thank you, Shaheen. Good evening, ladies and gentlemen. My task today is to introduce someone who actually needs no introduction. Still, many of us are ardent followers of Gopalji's social media posts, where he covers in detail, like Jara sir said, the events he attends, and those synopses are often intricate, meticulous, and truly interesting to read on what's happening in and around Doha. Gopalji is definitely one of the most celebrated Indian community members with all-round interest in business, sports, music, and matters of culture. A resident of Doha for the past 27 years, Gopalji is a chartered accountant by profession and is a senior partner with KPMG in Qatar. He heads their audit services and was heading the oil and gas practice for KPMG in the Middle East and South Asia, covering 15 countries for the last 10 years. His journey in KPMG has been truly remarkable, joining back in 1994 as one of their first employees, 8th to be precise, and instrumental to the growth of the firm, which now boasts close to 350 employees, including 10 partners. Talking of his personal life, he's married to Madam Varshini and has 2 kids, a son and a daughter, aged 13 and 10 respectively. He's a very active Indian community member, as we all know. He had been the chairman of Doha chapter of Institute of Chartered Accountants of India in 2001 to 2002. After being in the ESCOM for almost 3 years, he has been the treasurer of ICC and IBPC during the period of 2003 to 2005 and 2006 to 2008, respectively. And currently, he is the head of finance in IBPC. He's a recipient of Dilip Thakur CA Professional Achievers Award in 2016, and he featured also in the top 50 prominent achievers in Qatar in the book The Indian Odyssey in Qatar, released in early 2016. His love for music ensued him in running a music lovers group and has now set up a company called Beats and Tunes Events to host music concerts in Doha, bringing in top-notch musicians from India. He's also one of the lead singers in a local orchestra called Doha Dweni. Probably after the end of today's official session, we could hear a few lines from you, Gopalji. When it comes to sports, he's an ardent cricket fan. In fact, I had to say his love and support for Chennai Super Kings is unparalleled to what I've seen. I've read in one of your recent posts that barring 1 or 2 times, you have almost watched all the matches of IPL at the venue. He has played in the hard roll league in his first 5 years in Qatar, and the last 2 decades has been playing in the Qatar Veteran Cricket League, and presently runs his own team called Lovely Littles in Veteran League, and is also a regular in Super Veteran League. He has also a team called Desi Army, who travel around the world to cheer Team India in World Cup competition. They had been to UK, Australia, New Zealand, West Indies, and India to witness World Cup competitions and support Team India. Again, another interesting fact. So next World Cup, if you're planning to watch the matches and looking for a team to join with, you know who to get in touch with. Surely next time, so we need a session on time management from Gopalji, because despite being such a busy individual, he finds time for pursuing all his passions with equal strength. Truly wonderful and inspirational, sir. I hand over the Zoom platform to you for today's keynote. Thank you.
Thank you. Thank you very much, Fazil. I'll just share the screen.
Yes,
Yeah.
sir. Yeah.
And project also.
Yeah. Is it on projection mode now? Not yet.
No.
But the
You
screen
have
is visible.
Screen is visible. You can just.
The screen is visible. You have to get the full screen, the slideshow.
I've done that.
Yeah,
Yeah.
Yeah.
Okay.
Fossil is visible.
it's good.
Not Gopal.
Now it's okay.
Yeah, now it's okay.
It's
Yeah.
good.
Good evening, everyone. It's been a great introduction from all of you. Really humbled by these kind words. First of all, I would like to thank Kerala Business Forum for giving me this opportunity. Special thanks to founder, president, and advisory committee chairman. We are still waiting for him, Abdullah Taravat. I hope he is hiding somewhere. So special thanks to him, and of course the present president, Jayarajanji, and the architect behind this show, Shiji Valiakad, the managing partner of SVP Creston International, and he is also a fellow member with me on the managing committee of Indian Business and Professionals Council, IBPC, which is one of the 4 apex bodies of Indian Embassy in Qatar. In my view, KBF is one of the most vibrant affiliated organizations of IBPC. You've been organizing series of events, knowledge sharing events, and interactions with the business community in Qatar. So these are some of the things which other business forums have to learn from you. As Jayarajanji said, last December, I had the privilege of attending your KBF Business Conclave. That was a brilliant event. You brought the best in business from Qatar, and also you brought Mr. Jairaj, Honorable Minister of Industries from Kerala, Jayarajanji. So it was an event where you could showcase the potential which Kerala had for investments from Qatar, and the same way reverse investments into Qatar. So definitely, I was thrilled to attend that event, and I'm hoping for more business conclaves from KBF. So it's indeed my privilege and honor to be presenting to this forum on a subject which is very close to my heart. As most of you have said, I've been working on this sector for 27 long years. So I'll be more than happy to share my thoughts on this. Being an auditor for life, I would like to start with some of the disclaimers and confirmations, I would say. First and foremost, I'm not a pundit in this sector. First, I must say that I'm just sharing my views and thoughts based on my experience of working with Qatar Petroleum and almost all the joint ventures and subsidiaries and associates of Qatar Petroleum for the last 27 years. That's more of knowledge acquired from associating with these entities. That is first one. Then the views are all my own views, nothing to do with the logo behind me. It's not KPMG's views. It's all my own views which I am sharing with you. And all this information which I am sharing are all in public domain. Nothing is classified or confidential information which I am sharing with you all. Finally, the presentation will have lots of facts and figures. If you are really feeling bored, I can't help it, because this is something which I need to share to put my perspective into context. So that's about it. With that note, I would like to start with my presentation. As you all know, for the last say about 8 to 10 months, the world has changed upside down. COVID has really pushed pass button in all our lives. And businesses across different geographies and different jurisdictions, and all the sectors are severely impacted. Some of them are severely impacted than others, but most of the sectors are impacted by this pandemic. So in this presentation, I'll just share what's my views and thoughts on COVID-19 impact on the global oil and gas sector, as well as what is Qatar's prospects on this and how Qatar is dealing with that. So with that note, this is my first slide, which really talks about what has happened to the price, of oil price in the last, say, couple of decades. So it's just fallen off the cliff, and the big fat lady is down on the floor. Somebody to help her out to lift it up. So this has been happening. I would say I would start with 1998, when there was a Far East crisis. the global economies were really struggling. Oil price went down to $8 per barrel. So that was 1998. Middle Eastern economies were all reeling under pressure, including Qatar. There were a lot of measures which were taken to stabilize the economy at that time, 1998. Then slowly, oil price bounced back till 2008, when we had the financial crisis, when Lehman Brothers fell off, and then you had the US subprime crisis, where global economy went on severe depression during 2008. That time again, the oil price plummeted down to say about $20 per barrel, but it bounced back immediately. From 2009 to 2014, I would say most of the oil producers and exporters are running to the banks cash. It's continuously on the high. The average price, I would say, was more than $80 per barrel, or even $100 per $80 to $100 per barrel, and the highest, the peak was about $145 to $150 within that 5-year span. So that why is that? That is a period where there's a huge demand from emerging markets. China and India were growing at double digits. Brazil, and then you have growth happening in Africa. So there was enough demand, and the price was really moving up due to this demand which was coming up, and also the oil producing countries were investing on capacity building. They were investing more on increasing their capacity. So it was a golden era, I would say. Those 5 years period was really good. But 2015 onwards, again, the trend reversed. You see from 2015 to say up to the end of 2019, prices went down drastically. Middle Eastern economies especially severely impacted due to the prices which are as high as 100 plus, and then average price was hardly about 60 to 70. So there is a drastic reduction in the oil price, so which has really affected the overall economy in this region. If you see the general climate, if you are talking about the retail industry, that was one of the major industries affected because of this oil price slump, because you have the expat population. They were having job insecurities. So 2015 there was a layoff. 2017 there was a huge layoff. So there was a continuous layoff on the oil and gas sector, which was also trickling down into the other sectors. And there was a job security issue. People are not spending money. They were just spending on essentials. So these are all the trend which continued up to 2019. In 2020, we all know what has happened. This is completely unprecedented. What we have seen in the last 10 months of 2020. The huge demand destruction has happened in the oil and gas sector due to the lockdowns in most of the economies. Again, with the second wave, more lockdowns are done. European markets. No aircraft. People are not traveling. There are no aircraft flying for really 3 to 4 months. Even now, the number of aircraft running is very few. No cruise ships. Even the cars in the roads were very less in the last 10 months. So this has really put tremendous pressure on the demand side of the oil, and that's because of that the prices dropped down. As we speak now today, if you see the slide, the bottom of the Western Texas, there are two benchmark prices for crude oil. One is Western Texas Institute, WTI. The other one that is US based, and the Brent crude, which is the UK benchmark price. So 37.6 and 39.8, much better than what it was in May or even in April, but still significantly lower than what it was in the previous year. Same way with natural gas as well. You have two benchmark for natural gases. You have NBP prices, and then you have Henry Hub prices. Both are hovering around $3.2 per MMBTU. MMBTU is a million British thermal unit. So this is the scene as of today. This sets up the tone in terms of what we are going through in this industry in terms of the price. So moving forward, I'll just give you an overview of the energy market, global landscape. See, the traditional centers, when I said, the emerging markets are really, taking the huge stake in the consumption. India, China, of course, China has gone through some kind of trouble in the last 4 or 5 years. But if you compare in the last 20 years, definitely China, India, countries like South American countries, Brazil, Chile, and then African countries like Kenya, Tanzania, Algeria, that all these countries have really emerged as big consumers, and they have really become the centers of oil and gas sector in terms of the consumption. Energy transition, the fossil fuels have been dominating for so many years, but due to the gradual decarbonization of the fuel mix, which is happening across the globe, gas is becoming more popular than oil and coal. Of course, renewables are still growing at a very slow pace, though. You have the wind and solar power is happening in pockets, but because the cost of production is high, the rate of growth in renewables is not really as much as or what people can expect. So this is the energy transition. Middle Eastern economy still continues to grow. They still happen to be the major supplier of oil and gas with 40%. OPEC price war. This is an interesting thing which I would like to share. What has happened in 2020 in terms of the OPEC price? As we all know, most of you will be knowing what is OPEC, Organization for Petroleum Exporting Countries. There are 13 countries in OPEC with headquartered in Vienna in Austria. You have, within the Gulf, you have Saudi Arabia, UAE, Kuwait, and then you have Iran, Iraq in the Middle East, then you have Algeria, Libya, all these countries, a totally of 13 countries are there in OPEC. Then in 2016, they started OPEC Plus, adding 10 more countries into the OPEC Plus forum, which are non-OPEC countries, but large producers and exporters of oil like Russia, you have Mexico, Malaysia, Bahrain, and Oman, which was not there in OPEC. Kazakhstan, there are Azerbaijan, all these countries got added to OPEC Plus basket. So what happened in 2020? 9th March, OPEC met with Russia and the talks failed in terms of the production cuts. So the oil price nosedived down to $18 per barrel by March, which is a significant low. So it's not sustainable for most of the oil and gas producing countries. So they again met with Russia. OPEC Plus met, mainly Russia because of the huge producer of oil and gas. So on 12th of April, they met and they said up to May end, they will have a cut of 9.7 billion barrels per day. So the total production globally is 95 million barrels per day. Out of that 9.7 million, which is close to 10% or slightly more than 10% cut on the daily production, they agreed up to May. It was helping, but not really much because of the huge demand contraction which has happened, and there's a huge supply-demand gap. Now you must have seen in US especially, it went down to negative. I know that's because of the derivatives they had. They have a unique market where there's so much of derivatives on the crude and the gas. So because of that, it went down negative as well. But what they did again, they met in July, OPEC Plus, and they said they will go for a cut for a lengthened period, say up to end of December 2020. They agreed to cut down the production by 7.7 million barrels per day, which is again a significant move, which is mainly, you saw the price, which is slightly better than March, April, because of all these production cuts done by OPEC countries and OPEC Plus countries. Russia still hints that they will continue this production cut beyond 2020, which is definitely on the cards because if they're going to live down the production cuts, the demand supply gap will become huge and the price might again drop down to 20. So it's a sensible move by Russia to continue. That's being talked about. But Libyan output might come in. I know Libya has been up and down on production. If their producers coming onto the market, again, it will have an impact on the overall price. I talked about the demand contraction, which which basically derived from all these lockdowns which has happened. The fuel demand has considerably reduced. If you see the fuel demand, it's just 70% is from Asian markets, and Japan and India has really gone down on the demand. 11 to 15% is the contraction in demand in India and Japan alone. China is okay, stabilized, but still it's not like what it was before in terms of the energy demand. So demand contraction is severe. Global LNG demand has also dropped by 4%. So what has happened is it has resulted in cash flow issues for most of the national oil companies or all the oil producing countries and exporting countries, you have a cash flow issue because either the customer is not willing to take the quantities which they were willing to take, or they were bound to take as per take or pay schemes. Most of the countries will have a take or pay agreement for crude and gas, and there's been deferral of quantities taken by most of the consumers, and also the price itself it being low, it has put severe cash flow pressures on the oil producing countries. So this is the overall view of the energy market. But the next slide, I will talk more specifically on LNG, what has happened, because we are in an LNG world. Qatar is famous for what? What we have seen in Qatar in the last 25 years, why Qatar has gone to this stage in terms of the overall global scene is because of its wise investments in LNG. It's so relevant for this market. So I thought I will talk about what has happened in LNG in the last decade. See, if you see Qatar's LNG is linked with oil, which is called Japanese crude cocktail, which is called JCC, which is the price. The price is benchmarked with JCC. But what we are seeing nowadays is from the monopolistic market, which was existing before, it's moving to spot markets now. So all these oil-linked prices, the balance is shifting. Not so much in Qatar, but there are other countries where balance is shifted towards spot markets. So that is something which is seen in the last 3-4 years, especially. You see, 2011 to 15, there is a big spread of the prices. If you see US, there's a price was about 1 minute. I will not able to see my slide fully. Okay, hub prices, Henry hub prices about $3.3 to $5 per MMBTU. This is the US sector. But if you see the prices which is getting being fetched in the Asian markets, it was as high as $18 per MMBTU. Wide spread of prices. Why? Because US was having a shale gas discoveries, and there are a lot of small shale gas producers. They have pushed down the price tremendously. On the other hand, crude prices were increasing. As I explained earlier, those 5 years of golden era in terms of crude prices, since gas prices were indexed to crude prices, you have this huge differences in terms of price in US and price in Asian markets. Global LNG capacity also rose in the last 5 years from nearly 25% capacity is increased in the LNG market and still continuing to increase. If you see Qatar, by 2027, we will be producing 125 or 126 million tons per annum. We are right now standing at 77 million tons. So moratorium in Qatar, yes, we had a moratorium in Qatar in the sense Qatar took its vow that they will not explore further for gas. That was there for about 5 to 6 years. They lifted the moratorium in 2016 or 17. They announced that they will go ahead and explore further for gas and develop more capacity for LNG production, which they have announced, and it's already on the pipeline now for next 6-7 years of LNG investments. Australia again, big LNG investments are happening. Even though some of the projects have been shelved, which I will talk about in the next slide, but the super majors like Shell and ConocoPhillips have been investing heavily in Australia and increasing the capacity. So this is something which is important statistics in terms of what's happening on the LNG side in the last decade. Now let's talk about Qatar. So Qatar's energy landscape. Why Qatar is having such a positive kind of a story when compared to a lot of other energy producing countries. One is the gas, as you said, third largest gas reserves in the world after Russia and Iran. And importantly, these gas reserves are all centered around one area. The North Field is the biggest gas reserve in the world. So within 6,000 square meters, you have you have 900 trillion cubic feet of natural gas. That's unprecedented. That's in fact the God's blessing for Qatar. So that has really put us in a world map as far as gas reserves and the overall energy capacity is concerned. And even in the crude, now we are 15th largest crude oil reserves. We've got 25.2 billion barrels of crude reserves. But gas is where the focus is. If you see the GDP contribution, 60% of Qatar's GDP of $192 billion, 60% of that is contributed by the oil and gas sector. And 60% of Qatar's exports is LNG and 30% is crude. So this is a significant number in terms of the overall dynamics of Qatar economy. In terms of cost of production, as I said, 900 trillion cubic feet is the reserves, but they've invested wisely on the LNG in the last, say, from 1992, I think Qatar Gas was established, but the initial production or the shipment happened in 97 for Qatar Gas and 99 for RAS Gas. So up to 2007, they continuously invested on LNG trains, which I will talk about later in a separate slide in terms of the LNG success story. But 77 million tons is being exported, produced and exported currently, which will go up to 126 million tons. But the average cost of production is very low when compared to all the other gas producing countries. So that is also an important statistics. On the right hand side, I've talked about what is the total marketed production in terms of the crude, the oil and oil equivalents. We call oil and oil equivalents because it's not just a crude, but you have condensates, you have natural gas liquids. So that's the overall composition. Out of 1.9 million barrels per day, nearly 750,000 is the crude production. And so you have the onshore production, which is Dukan, which is the 1940 discovery. It's about 335,000 barrels per day production is there. Then you have two QP operated offshore fields, Maidan Mezam and Bulhanan, 85,000 barrels per day is produced from there. You have Al Shaheen field, which is operated by Maersk Oil, which is the Denmark company, for 25 years under the production sharing contract. It got expired in 2016, and then QP wisely did a move to set up a joint venture company called North Oil Company, where Total is as a joint venture partner with 30% stake and QP with 70% stake. They are producing about 300,000 barrels per day. Then we have Occidental Petroleum, another production sharing contract which expired after 25 years period in 2018. This time QP bundled Oxy into QP's own operations. So these are two fields, Idal Shergi, North Dome and South Dome, producing about 100,000 barrels per day. That is part of QP now. Then you have Cosmo Oil, which is a Japanese company in Al Karkara field, which is a company called QPD, Qatar Petroleum Development. Then you have the Al Khaliji field, which is a total operated field, say up to 2013, which was under the production sharing agreement. And that was the first move which QP did. At the end of production sharing contract, they changed the model and set up a joint venture company with Total, and there it's producing, it's a small field, about 5,000 barrels. So this is really the contribution in terms of the crude. And then you have all these associated gas fields and non-associated gas fields. Associated gas fields is basically when you drill for crude, you also get gas, but non-associated gas fields is purely gas fields. So there's those natural gas which is taken out of all these fields, all these wells, or being shifted either for as a feedstock for all these downstream industries, or also for Karama. There are a lot of gas-based turbines. I know the production of electricity through gas turbines, where feedstock is gas from all these blocks. So this sets up the Qatar's energy landscape. Moving forward, I'll touch base on what's happening worldwide on capital spends on expansions. See, as we talked about, there is so much of uncertainty in this market, in this sector, because of the demand contraction, prices dropping down, people are not able to take the committed quantities, cash flow issues. So all these countries which had planned for expansion have really curtailed their expansion plans or even deferred it for future. So this is happening across the globe. Second point is very interesting. I just saw it yesterday. This statistics of North American oil and gas bankruptcies, which is happening heavily in the last 8 years or probably last 6 years. All the shale gas producers, small-time producers, they all become bankrupt. It's an all-time high of $89 billion is the overall debt from these companies. Is going to cross about $100 billion by the next 2 months, I believe. That's a staggering number, which is really going to have an impact on the overall sector. So moving forward on the capital spend deferral, in Australia, as I said, they are investing heavily on LNG. Woodside Group, nearly $50 billion worth of projects are being shelved or deferred. Final investment decision is delayed in most of the projects to 2021 or beyond. In the Middle East, especially in ADNOC, they have deferred projects worth about 1.65 billion to major Dalma gas development projects. So these are all happening. Qatar itself has announced some of the deferrals, not necessarily in the oil and gas field, but they have announced some deferrals. And of course, it's a news that QP minister openly announced that there will be cut on the operational and capital cost by 30%. This has been happening from May 2000 or April 2020 onwards. But I would like to say here, Qatar is the only economy, oil producing or oil exporting economy, which is doing differently in this troubled period. They are the only guys who are still investing. Still that LNG projects, which I talked about, taking the production from 77 million tons to 126 million tons by 2 packages by 2027. That's really on stream. I know feed has already been done. I think the EPC contract might be awarded for the initial phase soon. So that is still on progress. QP signed major agreements with shipping companies. And I'll talk about LNG carriers in the next slide, but they've again signed with South Korea and China for building LNG fleet. So this is another major initiative which QP has done. They have invested, at least about 10 years back on Southhook Terminal in UK, which is a gas regasification terminal. Now they have signed a 25-year-long agreement for LNG storage. That's a significant move as well, and this will start from 2025. They have invested 30% on Total's field in Mexico, then another 45% in West Africa, another 30% in Angola. It's unprecedented. You don't see companies investing now in oil and gas, but Qatar is definitely standing tall in this sector by still active in acquisitions and doing something which can keep the energy sector going further. And that speaks volumes of the leadership of this country, where they know the vision, they know where this sector is heading towards. So they're wisely investing on these assets to make sure that the engine still continues. So that's an important remark which I like to make in this slide. And last one is on the digital innovation. COVID-19, as you all know, there's so much of for example, this meeting, normally you'll have a physical meeting. Now, we are able to sit in our home and then talk to at least 70, 80 people. In fact, the attendance always been higher in webinars than actual seminars. So because of people not required to commute from one place to another. So this is something, remote working is really improving the overall functioning in the oil and gas sector. I would say the investments in digital domain has really been accelerated. What the oil and gas companies wanted to do in probably 2023-24, they've already started doing in 20. Including QP. QP also has invested heavily on a project with Honeywell for the North Field expansion project. With SAP S4HANA, the cloud-based solutions, that's a huge investment which QP has made on the digital solutions. So their digital oil fields, it's a buzzword in the oil and gas sector, including QP now. So there are a lot of things which has really accelerated the spending on the digitalization and technological advancement in this sector. So that's an important takeaway from this pandemic, I would say. I think I got only a couple of more slides. Qatar's LNG success story. This is something, as I just touched base, how is Qatar progress like this in the last 20 years? Because of its wise investment in LNG. The leadership of the country had the vision that this is going to be the future for the next 30, 40 years. So the 900 trillion cubic feet, instead of leaving it inside, let's just wisely invest. So it started from, as I said, 91, 92, Qatar Gas was established, and then RAS Gas was formed. And then, it's a success story continued. So the first LNG plant commissioned, you have Qatar Gas commissioning was done in 1996. Then they continued with 14 trains. 7 trains in Qatar Gas, 7 trains in RAS Gas, producing 77 million tons. So they reached their capacity of 77 million tons by 2007. I remember there was a huge opening ceremony in Ras Laffan, which happened for announcing that Qatar is set to produce from all 14 trains, producing 77 million tons. Now, as I said, this is going to increase to 126 million tons by 2027. Spread of risk with different stakeholders. They have not gone with one super major. So they nicely spread the risk with Shell, ConocoPhillips, Total, ExxonMobil, Marubeni, you name it. They have not really gone ahead with one player. Nicely spread. Even Oxy was there for so many years on the oil side. But if you talk about the LNG side, all the super majors are involved. low cost capital cost because they went in early. The capital cost for constructing these trains were much less when compared to what Australia is facing now, because I know they are also embarking on a similar construction phase. Biggest gas resource, which I've already touched base, 6,000 square kilometers, not square meters, square kilometers of area, a North Field, a single point, biggest gas reserve in the world. So that has also helped them in that success story. Cost of production, again, because it's all in a single point, the gas pressure is very high. When you have widespread, gas reserves like Russia and Iran, the investment cost is more to get the thing out of the earth. But here, since it's all centered around one area, the cost of production of gas is much less when compared to other LNG producing countries. SPAs, most of the LNGs across the world, LNG's operating model is always backed up by a long-term sale and purchase agreement. Qatar has also done the same. 85% of their produce is sold by long-term sale and purchase agreements. It starts with Chubu Electric in Japan, then Petronet in India, you have KOGAS in Korea, PetroChina, ExxonMobil in US, Adriatic, the Italian Eni as well. There are so many countries and companies with which they have signed up the long-term SPAs. And most of these SPAs have got the price, gas price, which is linked with Japanese crude cocktail, which we touched about earlier. But this is, of course, the dynamics is going to change in terms of the pricing. The more and more spot deals might come in. So that's something which we have to see in future, how it's going to pan out for Qatar. Investments in the entire value chain. I touch base on Nakilat. Not many countries, in fact, Qatar is the only country which has invested so much on tankers, LNG carriers. There are about 65 vessels which are either only owned by Nakilat or jointly with other joint venture partner. About 65 vessels which carry the Qatar's LNG across the globe. So the transportation revenue remains in Qatar. So it's a wise move to invest on a value chain. Same thing with regasification terminals. They invested in Golden Pass in Houston. They invested in Southhook in UK, Adriatic Terminal in Italy. Golden Pass, actually when the prices were really high, it was a import regasification terminal. Then when all the US prices went down due to the shale gas producers, they decided with ExxonMobil to convert this import gas terminal into an export gasification terminal, and they've set up a huge company there, which will in fact buy shale gas deposits and then produce there and sell it in the market, US market, or export into other markets. So that's a huge regasification terminal. Again, I'm talking about the value chain, the entire value chain of oil and gas. Divestments in energy sector. These are all LNG stories, but in the last 3 points, I will talk about what has really Qatar done in terms of divestments, and what is that they have done differently when compared to some of the regional oil and gas producers and the national oil and gas companies. There are 5 divestments which have happened in the last, I would say, 20 years, because 2001 Waqood was formed, Qatar Fuel Company, which you see all the petrol stations. It used to be QP Refinery. In fact, QP Refinery was before that National Oil Distribution Company, NOTCO. NOTCO became QP Refinery. QP Refinery, instead of selling the refined products in retail and through petrol station, they said they'll form a company called Waqood, and the QP sold the shares in the open market. So Waqood became a listed company. So that was the first divestment which happened in the energy sector. Next, IQ, 2003. 5 large downstream companies, Qatar Fertilizers, Qatar Petrochemicals, Qatar Steel, Qatar Fuel Additives, Kafak, and Catofin. All those 5 large companies were put under a basket called Industries Qatar, and they put it into the market. So that's the second divestment which was done by QP very strategically. And GIS, Gulf International Services, 2007-8. There are 4 companies which are already operating. Gulf Drilling Company, which was earlier on a joint venture with Japanese drilling company. Then you have Gulf Helicopters, which was earlier owned by Gulf Air up to 1998, and after that Gulf Air sold to QP. QP was owning fully, and then this entity was put under GIS, Gulf Helicopters. Then you have Amwaj Catering, and then you have the Al-Quth Insurance. All those 4 companies put together under GIS, and GIS went to market. Then MPHC, which is the Missile Petrochemicals Holding Company. You had QChem and QChem 2, which is again a joint venture which started. QChem started in 1998, with Phillips Petroleum. Then Phillips Petroleum was acquired by Chevron. It became Chevron Phillips. Chevron Phillips and QP owns Qatar Chemicals, QChem, and then QChem 2 was also formed. They produce HDPE, which is the high density polyethylene. Capco, which is under IQ, is still producing LDPE, which is the low density polyethylene. So the QChem 2, and then you have another entity called QVC, Qatar Vinyl Company, which was producing vinyl monomer and ethylene dichloride, EDC. They were put under MPHC. That happened in 2014-15, and then 2017 December, Camco, which is the Qatar Aluminium Company, which is Catalum, which is put under Camco, and it was listed in the market now. So these are 5 divestments which energy sector QP has done. So which is really propelled the Qatar economy, and the Qatari investors, individuals, were able to participate in the energy sector. So it's a wise move to take care of the equitable distribution of wealth as well, I would say. So that's on the divestments which QP has done. Strategy for PSAs, I touched base on that. Production sharing contracts, early stages when, say up to 1994-95, all these contracts were signed with super majors or other international oil producers, because QP wanted that know-how in terms of developing a field and producing the field. But over the period of 25 years, they have got enough acumen in terms of producing and managing the field. They thought, okay, instead of again extending the production sharing contracts, look at other models like JVs. So 2013, when Al-Khaliji Fields production sharing contract with Total got expired, they formed a joint venture. 2016, when the Maersk Oil production sharing contract expired for Al Shaheen Field, they formed a joint venture, which is NOC, which is Total and QP. And recently, 2018, Occidental's PSA expired, they bundled Oxy into QP. So these are some of the wise strategies formed by QP based on the acumen which they gained over the last 25 odd years. Last point of this slide is NOC turning to IOC. So this is something which I keep talking about in many forums, how a national oil company takes the role of an international oil company. Like, you have the Shells and Exxon Mobils and ConocoPhillips and Totals of the world. QP is also stepping into those zones, by doing what I talked about, like divesting in the energy sector, and then continuous investments in downstream, and also in overseas investments, downstream as well as LNG sector, as we already talked about. Overseas investments, they have been acquiring fields. Even the earlier slides we talked about, even during pandemic, they have invested in with Total in some of the they have taken participative interest in various countries. But they have already investments in US and UK, which I talked about. Golden Pass, South Hook Terminal in UK. Brazil is a big operation for QP. China, Singapore, they have downstream units. Argentina, they invested 2 years back. Huge operation. Mexico, Malta. There are so many countries in which they have been investing heavily outside Qatar. So this is really giving a flavor of a national oil company becoming an IOC. So that's on the LNG success story and what QP has done successfully. My last slide is, how does the future look like? So we talk about the LNG. There's been a glut. So even though we see that Qatar is investing, Australia is investing, glut has already come in 2018 itself. That's why you see the pricing mechanism itself is shifting. There's no more, even though Qatar has been lucky to have all these long-term SPAs under the benched oil indexed prices, it's all going to change. And it's already, discussions will happen in various countries and various LNG producing countries for shifting to spot and hub prices. So that's definitely on the cards. 2020 is an extreme cyclical event. I'm sure this drop, it'll be there for some time. We are not going to see hundreds or $120 per barrel, which we had seen between 2009 to 14. That's a distant dream for the time being. And also something which is not there in the slide, as you all know, the EVs, electric vehicles, is getting prominence across the globe. That will significantly reduce the dependence on fossil fuels. Producing countries like Qatar also might get affected probably for 10 to 15 years down the road in terms of the fuel demand. In short-term perspectives, I would say the speed of economic recovery is critical. How soon various economies recover, and then the impact of oil and gas demand and price. The economies recover, then there will be more demand from, especially on the emerging markets like India and China, Brazil, the African countries. Or even in all the Asian countries, when the demand picks up, obviously the prices can pick up. And economic instability on the other side of the coin. If you have economic instability, it could lead on to political instability as well, which can actually affect the supply also. So there's a possibility that supply can be affected, and that can improve the price situation. That's also a possible situation. The big question now from the pandemic: which direction is the energy transition headed? I talked about the energy transition. The fossil fuels being now shifted to or replaced by low carbon energy. Energy products, or in terms of technologies, whether it's going to happen or not, whether all these countries which were thinking of investment in all this technology for producing low carbon results, will they do it because of these issues in fossil fuels, or because they are already suffering, they don't have means to invest in the technology? That's something, it's a big question. We have to wait and watch for that. That's something which is not in our hands. We have to just wait and watch. I would like to finish this presentation with a quote from Vincent van Gogh, who is actually a Dutch painter, but he's got tremendous quotes on various topics. I just like this quote: "If I cease searching, then woe is me. I'm lost." That is how I look at this. Keep going, come what may. With that note, I'd like to conclude my presentation, ladies and gentlemen. I'm sure there are some ladies as well I have not seen when it started. Probably, at least we'll keep it as a gentleman's show. Thank you very much for patiently listening to me. I've been rattling up a lot of numbers. If I had bored you enough, I'm sorry. You can immediately go and watch the IPL, what's happening on the IPL. But yes, this is all I had to share with you guys. Thank you very much once again for giving me the opportunity. Over to you, Fazal.
Thank you, Gopalji. As a wealth of information, big round of applause for Mr. Gopal Balasubramaniam. I think it's
Fasil,
yeah.
one second.
Sure.
Yeah. Thank you very much, Gopalji. I feel like I read so many books. By this time, it was like rain, it just finished the rain. Anyway, I would like to recognize the presence of IBPC President, Mr. Asim Abbas. But we were thinking that he will be addressing the gathering, but he had to go because he had some other work. But we sincerely thank him for joining. Thank you. Fasil, please go ahead.
Sure. So, indeed, it's a very detailed presentation on Qatar's history with oil and gas. And I'm sure we have questions from the audience today. So first, I would like to call upon our founder, president, and advisory board chairman, Mr. Abdullah Tariwat, to start off the question and answer session, and also to give a felicitation. Abdullah.
Good evening, and first of all, my apology. I had some initial trouble in starting. I think I'm audible, right?
Yeah, very much.
Yes. So I had some problem with the camera. That was the reason, and I missed that welcome part of it. But however, I know how much adjectives people have used for Mr. Gopal. We are very fortunate to have an international panelist, a social media writer, prominent personality, a well-respected businessman, and whatnot he is. And we always call him for any kind of advices with regard to the oil and gas sector, energy sector, industrial sector, anything is there, Mr. Gopal. Now, one point of time, I was thinking I was attending a Sira week on energy, like we had the energy leaders conference recently in India. So he was talking like a CEO, addressing the big energy, oil producing companies. It is excellent, Mr. I think to our level of business people, I think this was something which we will have to refer a few more documents to learn what exactly you have addressed. But
thank you, sir.
However, it was excellent, sir, and we can gain a lot of knowledge from what you explained today. And from one point, I heard about so many oil and gas sectors being affected very badly. We also want to know other sectors like industrial sectors of QP shareholding companies, how they are performing in the industry. I think you said about QChem 1 and QChem 2 expansion, and I think you skipped off RLOC, which is olefin plant.
Olefins. Last of all, olefins, which makes XN1, which is the cracker plant for ethane. Ethane is cracked into ethylene through RLOC.
Exactly. That I think you just missed from your list. Maybe I think you were overloaded with so many for the complete data.
Yeah.
Two questions I have for you. One thing is, what is the situation of job security for the expatriates in these industries now? That is one point. Second point, an advice to the entrepreneurs who are already into the industry, especially into oil and gas and the other bioproduct energy sectors and other industrial sectors in the region, whether they should go for an expansion. And many of our people like me, small businessmen in this industry, have cut on their staff, and we have sent many people on long leave. So what's your opinion in expanding or increasing the staff recruitment process, and again looking after the prospective part of it? So these are the two questions what I have. Please, thank you very much.
Yeah, sure. In terms of your second question first, see, there are still opportunities. As we talked about the hydrocarbon sector, what is going to happen in Qatar? This expansion in LNG, the North Field expansion project, which is going to run for next 7 years, that itself is going to offer enough opportunities for different players in the oil and gas sector. Just like when you had Qatar Shell GTL project, for example, Pearl GTL project. At peak, there were about 60,000 employees working in Ras Laffan and Pearl GTL project. Similar thing will happen now. There will be more demand for players in that sector. There will be a lot of small-time players who will be required to participate on a joint venture with other industry players. In this expansion, the North Field expansion itself is going to offer opportunities. More than that, as we all know, last year, QP started the Tautin project, the in-country value project. There are so many sectors under which they want local manufacturers to scale up. So QP has been buying extensively from all these international manufacturers. They want to see what can be produced locally based on the capacity which is already available, and what can be additional capacities if they can probably, if the measurement or the modification or specification of a particular equipment is not matching with what the local manufacturer is producing, QP is willing to give that know-how or advice, or probably some kind of a support will happen to make sure that the local manufacturer produces those equipments, those materials which can fit with QP's requirement. Now, I'm not just talking about QP, the entire QP train, the value chain of QP, all the downstream industries as well, probably will come into the foray. So in-country value, Tautin, definitely a big step, which will help for small and medium enterprises in this sector. So my advice would be, again, these are all my own views. Don't quote me for, Gopal has said this or no. I'm talking based on, what I have seen in other markets and what I have, seen as QP's vision. So I would feel that, it's wait and watch instead of taking any drastic steps. And we were just talking about this before the show started. Instead of liquidating or closing down the company, have a staggered way of bringing back the resources over a period of next 1 or 2 years. Once the EPC contract is awarded for these trains, there'll be enough activity. Tautin, when it really kicks up within 2 years, there'll be opportunities. Though I think that's what I would like to say as far as the opportunity. What is the first question? I forgot.
No, that was with regard to the expatriates who are seeking opportunities in the sector and their job securities, like their crude and
yeah. So again, my view on this is QP at least, and some of the QP companies as well, they had a huge fat. Whatever you have seen in 2016 as manpower reduction, and even during COVID-19 during 2020, there are a lot of these companies, they already had a fat which is being removed. That's what my take is, because I always had this discussion that some of these companies, one point, so probably two persons are doing one person's job. I know, so that is something which I always had a view in some of the companies. I'm not saying everywhere. Some of the pockets of the whole oil and hydrocarbon sector in Qatar had this kind of a fact. And so I think to answer your question, the reduction has happened, which is bound to happen. It is bound to happen when the prices go. So organically, none of these national oil companies have looked into. They have never looked into the company. They were all happy running to the bank with huge tons of cash when things were going fine. When things are not going fine, you look at with microscope and see which department I have excess, which department I have more than what is required. So I think this is bound to happen. This is what has happened. So people who got skills will be definitely rehired back on a contract basis, or some way they will have to come back, because I don't think QP or QP subsidiaries will leave this experienced people who have the know-how and then bring in new people for them to adjust to the culture of the organization, and getting to know of all these QP intricacies will take a long time. So I think they will probably come back on a contract basis. I think I would like to say that they had a fat, and that's what was removed.
Thank you, Mr. Gopalji. Thank you very much. It was
thank you, Abdullah.
Thank you.
Yes, back to Fasil.
Yeah, thank you. Next we have a question from Mohammed Shabib, Executive Director of BNI. Shabib.
Thank you, Gopalji, for this great informative session. A lot of the trends which was predicted much before, I think, has become to reality with the COVID. But one question that persists in my mind, and something that I've been thinking a lot about, is with this great correction in the oil prices, especially the energy prices, I would say we are safe with the LNG, since it's used mostly in heat and cooking, and also in most of the energy production for the electricity distribution around the world. But the focus on the oil prices, is the oil prices actually going to come back up? Because with COVID, I think it's just private cars that didn't run, or even the public buses that didn't run. But everything else was running. All the factories, they had to keep running. Electricity still had to be produced. Everything was running with hydrocarbons, just except the LNG. So is the prices actually going to get back even to 60 plus in the next 2 years? What is your analysis on that? Like right now it's in the low 40s, but a lot of countries are waiting for the prices to go back to 55 plus to start producing, because I especially had a distribution business for tools and equipment in Sudan, which kind of stopped overnight when the prices went below 40, and it needs to go back to 50 plus. What is a realistic viewpoint in your opinion to where the oil prices are going to be headed, the crude prices are going to be heading?
Yeah, good point. I know, as we discussed earlier, the removal of fossil fuels. So fossil fuels, which includes crude and gas as well. But on the gas side, there's still a demand which will continue for next probably 20-30 years. It will still continue. In terms of crude, I know it's a mixed feeling. I don't think that hundreds and 120 is all possible here afterwards. It will take. I don't think it will happen. In my view, it will never touch the 3-figure mark. It can go up to 60s or 70s, depending on the economic recovery of all these oil-consuming countries. See, it's not just the fuel on the car, right? When the refined products come in, you have naphtha, LHSs, fuel oil. There are so many refined products which are getting produced out of crude. So those demand for refined products will still be there for the consuming countries. It is not going to completely wipe off. It all depends on the speed of recovery of these oil-consuming countries. If it recovers, say, probably 2 years down the road, then 60 is still possible. 60, 70 is still possible. But in my view, the three-figure mark, I don't think it will happen in my lifetime again.
So what you're saying is the allied products which comes out of the refined is still going to drive up, because fertilizers, plastics, all those auxiliary products are still going to be there. But then where is all this crude going to be stored?
That's an issue. That's an issue. The storage of that's why you see all these issues. When you had, I think in May or something, when they had a picture of different seas. There's all tankers, full of tankers carrying crude oil. So that is going to be an issue. Or there's an opportunity for expansion and refined products. Some of the countries, instead of selling crude as such, for example, Qatar also, they can possibly increase the refining capacity to produce more of refined products and sell outside, because the demand will be there for at least a reasonable amount of time.
So where my question is exactly leading to is this, especially with ICV, I think there's a great vision behind that exercise. Because I believe there is a huge scope for SMEs to develop into manufacturing units, even in specialized niche areas. Because I truly believe that energy is going to be cheaper in terms of going ahead, especially in the Middle East where we are.
Yeah.
Right. So there is a lot of scope for SMEs, especially if you have innovative ideas as what. So, okay. So that's what I want to know. Like a lot of people come to me and ask me, is it a good time to start business? And I truly believe if you have a right innovative idea, it is the right place to start business right now.
No, agreed. Also, you can have alliance partners. Not necessarily everything should come on your own. I know there's a limitation of our brain, right? You can always have alliance partners. Somebody who is already proven technology they're running in any country, for that example, not necessarily India. I know Indians also. There's so much being done in India in terms of the downstream SMEs. So especially in this sector, if they can come out with some alliances for oil and gas services sector, I'm sure it will be a huge potential with the ICV project.
Thank you, sir. Thank you so much.
Thank you. Thank you, Mohammed.
Next, I would like to invite our honorary member, Dr. Mohan Thomas, to raise his question. Doctor, you're on mute. You need to unmute. Yeah.
Thank you very much. Mr. Gopal, it's an excellent and very informative presentation. Well, you concluded the best way in the energy sector that keep going, come what may.
Yep.
As you all know that the world has enough natural gas to last till 2060, disrespected that. But in 2015, when there was a UN climate conference in France, the Indian Prime Minister Modi and the former French President Francois Hollande jointly announced the formation of an international solar alliance. Already 61 countries have joined, 32 have ratified. India made a pledge of 1.4 billion US dollars, and France gave a promise of 700 million euros to this one. And great start was there to crack the solar energy to replace the carbon energy. It's more acceptable as a renewable energy and clean. Now it is expected that by 2030, 1,000 gigawatts of solar energy will be produced. Now, if that is a scenario, what is the future of hydrocarbon and non-hydrocarbon energy to come in the future? And you have asked that when will it happen? When that will happen? Gopal.
Yeah, sure. See, Dr. Saab, that's a good question. As we talked about the renewable energies, wind and solar, especially now we are sitting in a region where there is so much of sun, there's so much of sunlight. I remember, I think Clinton, when he visited Saudi Arabia, he made a point that why are you guys spending so much of investment in fossil fuels and crude oil exploration? Do it on solar energy with so much of sunshine available for you. You could make millions and billions out of it. This was 1997, 98. After that, there are a lot of Middle Eastern countries have also thought about it. For example, Qatar, QSTEC, Qatar Solar Tech, which is not yet started producing. They are going to produce polysilicon, which is an important ingredient for ingots and wafers, which will produce the solar panels. The solar panels. See, the problem now, Dr. Saab, is the cost of production of the solar panels and the overall solar energy itself is not as comparable to what the price at which, for example, Qatar is producing LNG now, with the $1.5 per MMBTU. I don't think that is possible in solar energy as we stand now, unless there's continuous innovation which can happen in reducing the cost of production of solar panels and all the other materials which can go into production of solar energy. Unless and until the cost of production comes down, they cannot scale up. The scaling up is possible only when cost comes down and the investment proposition in those solar producing companies comes down. Then probably, yes, it will happen. I'm not saying it is not going to happen, but when is a question which everybody is asking, that whether it's 2030 or it will probably go up to 2040 based on what we have seen. For example, India itself, we talk about India, Suzlon, we started brilliantly 10 years back on solar. Slowly, they're not really doing as much as what it was planned before. Same way with wind as well. Both these energies, renewable energies, we have not seen as much as growth as it was portrayed initially for the 10 years back. So I would say probably you have to shift the goalpost to another 10 years, probably 2040, you'll see more of solar energy, which can replace this traditional fossil fuels. That's what my view is. I could be wrong tomorrow if Chinese suddenly start producing solar panels at small amounts. See, in Qatar as well, you have a company called Siraj Energy now, which has been set up. They will produce solar energy in Qatar, which is a QWC, and mainly QWC is the Qatar Electricity and Water Company is the shareholder on that. So Qatar is also investing, Saudi is investing, Abu Dhabi is investing on solar energy. It will take some time. That's my take on that. Whether 2030, probably not. It will probably shift up, go up to 40s, before they completely wipe out the LNG market.
Okay, thank you, Gopalji. Next, we have a question from our KBF member, Mr. Farzad from Lexus Group. Farzad.
Good evening, everyone, and thank you, Gopalji. This was a wonderful presentation from your side. As a retailer, this is more than what I expected. The information that you have given us, more than the limit that I can bear. Okay. Having said, I have a couple of questions. In fact, the part of it you have already answered before. Part one of the question is, you spoke about the demand and supply of renewable energy of Qatar. My question is, what about the Far Eastern countries, or you spoke about Australia? How about the demand and supply of crude oil, or let's say renewable energy in those countries? That's part one. Second part of the question is, my question is specific towards the solar energy projects and future. You spoke about how Qatar is investing and how they're trying to build it up. My question is, what is the future of solar energy projects in India, to be very specific? If you can explain these two.
So in terms of the demand and supply of renewables, whether it's solar or wind or bio or anything, I would say it's still early stages. Supply, especially early stages, you are not able to produce in the quantities which is required. Okay, so that's why whether it's Far East, there's so much of energy demand. How can you meet that energy demand with a few gigabytes of solar or wind power? So there is a huge gap which has to be filled in by LNG or refined products, at least for, as I explained to Dr. Mohan Thomas' question, at least for the next 10 to 15 years, this gap has to be filled in by fossil fuels. So that is what I would say. In terms of the second question is what you said.
The scope of solar energy in India.
In India, okay. In India, of course, you see, if India can reduce the energy bill, to a substantial level by having solar energy produced in India itself, wind. There's so much of investment which is happening in India in wind and solar both. If that can replace the import bill of India, I'm sure that will have at least 2 to 3 points in the GDP growth rate easily. Because what is our import bill? Import bill is mainly energy bill. Okay, if you can replace at least a portion of that energy bill by indigenous production of solar and wind, definitely it will help. Demand is definitely there, but again, the cost of production of this wind power and solar power has to come down to increase the scale of operation. So that is what I would like to say.
And Fazil, I have one more question to Mr. Gopal, because it just popped up. Now, if you go to China, hello, can you hear me? If you go to China, the majority of the big cities, nuclear energy is used for even supplying electricity. So comparing to the market like India and China, how can we substantiate the future of comparing the demand for solar energy and the nuclear energy?
See, the nuclear energy after the incident in Japan, the Hiroshima incident, it's always been a topic of discussion, whether countries will be freely allowed to invest huge amount of their money on nuclear, or whether there'll be curb in terms of your nuclear production capacity. It's always been a debate across the globe. Okay, so I would not put my bet on nuclear energy going to such a level to completely nullify the supply of other fossil fuels. So it has to be a contained manner in which nuclear power capacity will improve or increase. It will be more on the other side. Solar and wind have got more, I would say, opportunities or capacities to increase than nuclear, because that will be under scrutiny by the world's across the globe. They will look at how what are the measures, what if something happens, so there will be so many questions which need to be answered. So it will not be a huge scale. Whatever they do, they can always say, okay, we are also producing nuclear power, just to say that we are producing, not to the extent of meeting the demand.
All right. Thank you, sir. Absolute pleasure. Thank you.
Lovely. Thank you.
Thank you. We have a question in the chat box from Aji. He's asked whether it is safe to trade on crude at this point.
People are doing, Aji Saab, I'm not a pundit on that. Anything which is gambling, I would like to be extremely cautious. I think you cannot, say, especially you see how US market went down to minus. There's a cartel in all these derivatives across the globe. There is a cartel. The people know how to play around. Unless you are expert in derivatives, don't play in the market by doing margin trading or buying in advance, doing all these deals. Unless you are an expert, your excellence is in travel. I would rather advise you to stick to travel than investing on crude forward deals.
Thank you, Gopalji.
Sorry for being blunt.
And Gopalji, I have a question with regards to LNG pricing going forward. You said it's going to change mostly from Japan crude cocktail to spot. How far that will impact Qatar's GDP going forward? And second, one other question is how far QP's revenues will increase in the years ahead from their overseas productions centers?
See, JCC, I'm not saying that it is going to go away. Sorry, probably if I have not conveyed it properly. Worldwide, yes, the oil index is being challenged and it can go into spot deals. Having said that, Qatar Gas still having JCC model as per long-term SPAs, which are still valid. For example, Petronet SPA started in 1999. Cebu Electric started in 1997. So they're all expiring or probably up for renewal. That time we will know whether the JCC pricing can be changed to spot or some other way of benchmarking the prices. But as of now, oil index prices still continuing. But my point is there are challenges on that. Because of the glut in the LNG market, the oil index price could be challenged and spot might come over. So to answer your question, when, I don't know. It will happen in future, I feel. But right now, it's all JCC pricing as far as Qatar is concerned. We are still fine, and the other spot market is all increasing. The ratio is still, tilting, I would say, but still on a much advantageous position because of the low cost of production. So that is the main advantage of Qatar. So in terms of your second question of QP investing on blocks, a lot of those blocks are green fields, right? They've just started on the exploration stage. Some of them are, it's not hugely producing fields, so it will take some time. They've always gone ahead with super majors. They're not gone with on their own. So it will be either with Total or ExxonMobil. They trusted long-term partners of Qatar. So they will not just, again, they will not take a huge stake. If you take all these companies, they'll take 10% here, 12% here, 15% there. 30% max. So they will not take a huge stake in a foreign territory and again join with a super major so that the risks are minimized. So in terms of returns will come, but as it all depends on the future as to how soon the economy revives those countries. For example, Argentina, we don't know what's going to be the future of Argentina's energy demand. So there are so many ifs and buts to be answered, but the returns, they have done proper due diligence before investing on all this investments outside. And as I said, they are with a strong partner. So it will come, returns will come.
Sure. Thank you. I think we have...
It's a political answer from the engagement partner signing QP balance sheet.
There's one more question from...
Yeah, we have Mr. Mumtaz who has raised his hand. Mr. Mumtaz, you can ask a question.
Yeah, the Managing Director of Benchmark Group.
Assalamu alaikum. Good evening to all. My name is Mumtaz Hussain. I
Good evening,
am
sir.
ICC founder member and ex-BNI member.
Thank you. Good to see you, sir.
I have multiple questions with respect to the pricing now. As of today's date, WTI 37.67 and Brent crude 39.83. Okay. So what is the Brent crude, the production cost? At what price they have to level, how they can manage it? And same way in the Brent crude oil also, especially our GCC region. And some of the countries, especially, largest producer of the GCC is the Saudi Arabia. Their economy is directly proportional to the crude oil production. At what level, price level, if they come, they can manage their budget. For example, Saudi budget is annually about 900 billion. Will with this price they can manage? This is my question. And the price was Brent crude price was some 2-3 years before, always it was above 60, and how that has come suddenly below 60-50 is still low. Was it the reason that WTI opened the production since which was closed for 40 years? This is one question. That's it. Then I can ask a second question later.
Okay. No, I'm not an expert on how the price of crudes, whether it's WTI or Brent is working. But what I can answer is, I would say at least in the regional countries, whether it's Saudi Arabia or Abu Dhabi or Qatar, even on crude side of it, there's good margin in terms of the price, what is being fetched and the cost of production. So the break-even point is not going to be reached. See, Saudi, you can guess whether it's 25 is a break-even point or 20 is a break-even point. I would say still, anything more than 20 is still a profitable scenario because most of them are old fields and they are producing still well with all the workovers they have done in the wells. The wells are still producing enough quantities at a much cheaper cost. Same with Qatar. If you talk about the Dukan field, as I said, 1940 discovery, and still producing 335,000 barrels per day. So with all this, the cost of production, I would say you'll still have a margin in all these Gulf countries. And that's why I would say, they will still have, as long as the crude demand is there, which I answered with for another person, where how soon crude demand will come down. That's a question which we need to answer, whether it could be crude as such or it could be a refined product, whether it is more advantageous to make a refined product and sell for most of these countries. So that is what will determine. But to answer your question, the break-even point, I personally feel anything more than 20 is still a good deal for all these Gulf producing countries. The second question, please.
Question regarding the WTI. Are there
you talked about why it has dropped down. Why it has dropped down. See, my simple theory on that is the dropping of the price is only demand-supply situation. So a lot of these countries spend so much on the expansion. Whether all these energy-producing countries have spent on expanding their capacities, and so the supply went up. Okay, whereas the demand was not catching up as much as supplies. So that has only pulled down the prices in the from 2014 to now, and also China is the major contributor, I would say, for drop in prices, because from 2015 China is not been growing as much as what it was doing for 10 years before. At least from 5 to 15, the growth what they had completely reversed in the next 5 years. So it's being a huge consumer, if you are not giving enough impetus to the whole energy economy, obviously the price will go down. So it's a combination of both the factors: demand coming down, supply going up.
Yeah, in terms of the production cost, so who are in the good edge? Is the Gulf countries or the WTI?
I personally feel, and again, as I said, I don't know the cost of production of the US side of it, but in the Gulf side, I would say they are still in a reasonable position, because they're all old discoveries. 1930 was Bahrain discovery, small field, the Awali field in Bahrain. 1930, 1940 Qatar discovery, Saudi, I don't remember. Old fields producing at a much lower cost of production, despite all this maintenance they are spending. So I think Gulf countries definitely will have, I would say, a break-even point which will be much lower than WTI.
Yeah, WTI, I heard somewhere it's around $40, $41,
Possible.
$42
Possible.
it's come.
Possible.
Okay.
We need to conclude. We will take a last question. Is it okay?
Yeah.
If there is any last question.
One last question from Mr. Anand. Mr. Anand, can I ask a question?
This has been a wonderful presentation that you gave, and I have my favorite question to you. See, most of the Gulf countries have been basically producing the raw material of LNG and say the crude and supplying. Now we do have a very stable and very fast growing market in India. So do you expect, or when do you expect some kind of an investment from companies like from Qatar or Middle East in further downstream industries and then have a share of the market in India? When do you expect that to happen?
For
Rather than just
example,
supplying.
I had an interesting, thanks Anand for your question. I had a meeting with the Haldia chairman, Haldia Chemicals chairman. I took him to Muntajat actually. Polymer is not produced in Qatar. Okay, they always buy polymer from outside. Polyethylene is there, polymer is not produced in Qatar. Which is produced in Oman and other countries. So Haldia wanted to have a tie-up, and this was there in papers as well, Gulf Times, Canadian News. So unless and until the Indian players show that urgency and come here, showcase their credentials, have that kind of a offtake agreements, because any produce in any capacity, Qatar alone cannot be the market. It will not be a sustainable model if we don't have an offtake agreements. They have to bring the technology. They need to have also commitment for offtake, whether they take it to India or take it to other customers from their own network of customers which are available either within the region.
Thank you,
or outside.
TMOD, Nitya Khan. Let's all give a big round of applause.
There's another webinar carrying on in your house, I think. Anyway,
I think some Toastmasters have joined.
Anyway, Anant, to answer your question, I think the hunger has to come from the Indian companies. I know, I'm sure, IBPC as well. We are trying our best to bring in real players from different segments of oil and gas sector to meet with the decision makers of Qatar, so that this can be taken advantage of. So this has to happen. Hope, inshallah, it will happen sometime soon. Did I answer your question, Anand?
I think his answer is when Qatar is going to invest in India.
My question was, rather than the Indian company setting up company factory here, I was wondering when, because finally the market is in India, so when Qatar will be setting up the plants there and investing there.
Yeah, that question, we need to probably increase the credibility of Indian investments for Qatar. Qatar Investment Authority unfortunately didn't have great experience of investing in India. QIA has to be convinced that it's a safe zone, and safe returns, the environmental or the regulatory transparent. There's a lot of work which needs to be done to make sure that QIA gets convinced on investing. For them, writing a $150 million can be a check, but we need to show that credibility to bring in investors from Qatar. So right now we are in that phase where we need to do a lot of work to make sure that QIA takes India seriously. They're doing it in bits and pieces, but if you look at the overall portfolio of QIA and what is India's take on it, very little. Okay.
Thank you, Gopalji. With that, we are closing off now our question and answer session. Now we've been almost 1.5 hours into our webinar, and to present the vote of thanks, I'd like to invite our Vice President Jenny.
Good evening, all. First, thanks, Gopalji. Very nice presentation and excellent. You've done a well done.
Thank you.
And very very much informative session, and I enjoyed, and I hope our KBF people also well enjoyed, and very, very well explanation and everything. Second thing, our vice chairman, Mr. Abdullah Terivat, and our advisory board member, Mr. Dr. Mohan Thomas, and executive members and MC members who is joined with us today in webinar. Everyone, thanks again. On behalf of KBF and myself, thank you all.